What's up, everybody? Welcome back. There's nothing more than I mess with in 2025 than the word transparency. And today, transparency is what you get. As per usual, you guys are probably the first on Discord to know if I have sold out of or exited any of my bigger positions in the portfolio, any big portfolio updates. But as I hinted to on Target, or on Twitter at least, I already gave it away. See, as I hinted to on Twitter with the Wesley Snipes meme of him crying holding a gun, the Target era for the channel is officially over. Now, I know this is a stock that I've gassed up over the last couple of years, but just straight up, I've matured as an investor and I've finally moved on. I think it's important to note when you're wrong with a company, and today that's what I'm going to be doing. Now, also for full transparency as well and disclosure, I still think there's a path upward for Target, but that path does not have me having my $850 or whatever I had in there still in it. But yeah, today we're going to be talking about Target, why I sold out, where I put the money into, just full transparency, something that I think needs to be shared more. Of course, we're going to pull up finchat.io for Target. It's been just a rough last 5 years, and the management certainly, I'm not very confident in them long term. I made a fixing the business model for Target if you're interested in it. Pretty good video, didn't get a lot of views, but that's how it goes these days. Just a rough 5 years. They've done nothing in stock price, like the opportunity cost of missing out and just indexing. It's been pretty rough. Now, obviously, I don't want to judge an entire company's performance over the last 5 years. They've had a successful track record, but you have to be honest with yourself. Where's the path for Target going forward? Where's the growth going to come from? I'm 19 years old still. I think there's a lot better options for me personally, and it's a big reason that I sold out. Looking at the revenue growth, they have a 3-year growth rate of 1.3%, 5-year growth rate of 6%, and a 10-year growth rate of 4.2%. So, that's pretty much what inflation has been. It's not been great. They haven't really grown their revenues amazingly, and the 5-year revenue CAGR you can argue is because of the stimulus checks. So it's rough. I think retail also is a pretty unattractive business model to be in, with exception to High Tide and maybe some other business models that are a little more prone to growth for the future. Valuation, though, I mean, you pay for what you get with Target. 13 times earnings, 13 times price to free cash flow. Like, I think it's pretty undervalued right now. I've said multiple times, we can look at analyst estimates. Like, I think a reasonable target for this company is like 160, 170. But just analysts, yeah, it's even gone down recently, mainly just because of how like inconsistent the management has been. This is just a company where it's just a roller coaster where it doesn't need to be. You have Target, you think of typically it's supposed to be kind of a conservative holding, collect that dividend yield, maybe a value recovery play if you get in really at the right price. I think that's like kind of the best case scenario right now if you're a value investor. But yeah, it's just nothing to give me confidence as a shareholder. I got to admit where I was wrong. I just think that I was too caught up in the story of a recovery where I was kind of blinded by other obvious options in the market. Obviously, another point is that when I first bought this stock, it was nearly 5 years ago. Kind of crazy. I bought this stock from the price variety of $100 basically to 220. Once again, that's full transparency for you guys. I was inexperienced. I didn't know what I was doing. I put some Christmas money into Target at $220. Pretty rough time, to be honest, owning that. I want to see actually what valuation I bought it at now. Thinking of it, so we could just go pull up here, go down here in finchat.io. Once again, link in the description. Support the cash flow kings. Price to earnings. Let's see. PE. Here we go. Yeah, P. This is just going to be embarrassing, but when I bought, essentially, it was actually no, it wasn't up there. It would have been right here when I bought. So buying this company basically double the earnings that it is today. A bit embarrassing, but once again, full transparency. They also, this should have been a red flag from the start, but they really just kind of misallocated their capital when they had that excess cash. I would have preferred to see them kind of store it up and maybe invest it back in potential future growth. I still think that it's kind of rough path for them, honestly. You just like, it's a pretty unattractive business to be in. And I think that's where I messed up. I was just blind to the fact that there's just like, I'm 19 years old, dude. Why am I buying Target? You know, total return as well over the last 5 years. It's been rough, 24%. So you'd have a return, just not a very good one at that, right? We'll look over the free net income and free cash flow as well before I kind of go off to what I put the money into. Free cash flow for this company has just been kind of a mess. Yeah, there's no growth. And then net income, probably maybe a more realistic thing to look at here because free cash flow has been a bit rough for them with some capex that they've had to do, some of the debt that they've had to pay, the money they've lost over the last couple of years. Just yeah, not what you'd ideally like to see. Going back to the stock price, I want to talk about the story a bit more at this company. So you can see here, 2020, it was all good for them. This is basically the stimulus pump that they got. This company was, yeah, it was honestly pretty wild. I bought in January of 2021. I remember around maybe around here, $220. I remember vividly at one point buying it then. Then in May, I remember this vividly. It's like PTSD from a war veteran. I get PTSD with my stocks. I was in class, second period English to be specific. I open up Seeking Alpha and Target is down 20% on the day. They basically just completely mismanaged their inventory and they lost a bunch of money because of it. Then in 2023, they kind of started coming back. Then they went woke, went broke, that whole thing. Then they came back. I was a heavy buyer here, around the $100 range. I thought that was a pretty good play. Then they started coming back. I'm like, okay, we may be back, and this is when I should have got out. I'll be honest. I just got a little way too greedy for my own good. And then it's just consistently done this. And more likely than not, they're going to trade back up again. But the opportunity cost for me, man, it doesn't make sense. And I've been trimming out. I got out at $140 before it went back to like 128. So once again, for full transparency, I'm going to pull up where I put the money because obviously my philosophy when it comes to selling a stock at least is I have to sell a stock at a loss. I should be putting the money into opportunities that I think are going to make back that dollar for me. So I screenshotted the Google Notes that I kind of do to keep up with my transactions. I will be presenting that right now. But yeah, basically the philosophy here, full transparency, I lost $130 on the stock, 14% loss. It was not a giant position, but still, it's going to be nice to have some of that cash to allocate in this one of my better core ideas. So with this money, I wanted to put it into some smaller to medium-sized holdings that I really wanted to allocate some more capital to that I think have a good trackway from here. So of course, I had to put into some high tide at $2.60. I think the upside with that is potentially could just make up for that $130 loss. So I'm happy with that. Put $500 in Amazon. This was kind of obvious. I think Amazon's a pretty reasonable buy right now. Amazon's obviously the biggest competitor to Target, but this makes Amazon one of the larger holdings in the portfolio of where it was a medium-sized holding. But definitely, I think I want to put more chips in the basket when it comes to Amazon. So Amazon, hey, this is like joining the dark side, but it's obvious. Amazon's kind of, I hate to call it Target a melting ice cube. I think they have their role. Why not just own Amazon? That's kind of one of the arguments we made on CFK. Then I indexed a little bit. I bought like $120 worth of SHG. You can't go wrong there. And then I also bought one share of Disney. Now, we talked about Disney on Orange Grove 55 the other day. But I think it's a pretty attractive opportunity right now. They're trading it like, I want to say 23 times earnings, and the price to free cash flow is pretty reasonable. I'm going to fact check that right now. Yeah, 23 times price to free cash flow, and the free cash flow is set to kind of make an explosion the next few years. So I think that's an attractive opportunity right now. But yeah, once again, full transparency. Hope you guys appreciate it. Let me know in the comment section. A lot of people have been kind of peer pressuring me to move on, so I hope you're all happy now. Once again, I believe in transparency. I still think there is a path upward for Target, but that path does not involve me on it. So I appreciate you all for tuning in. Smash the like button, subscribe. Check out CFK every Saturday, 8 p.m. Eastern, and do Dividend Stocks Hot Drugs. Have a good one.